Good morning, everyone. Welcome to the Euro Trade. I'm your host, Market Stoker D, and I've got my metallic blazer ready to trade silver. So let's have a look at what we have. But before we begin, if we are meeting for the first time, I have been trading for almost 19 years. 13 years out of that I spent at various prop firms trading the commodities, things like energy markets and precious and base metals. So let's have a look at what all of these levels and gamma exposure are doing today. If you follow me on Twitter, I posted an analysis on Friday that we need to be a bit careful with further continuation because we had some expanding volatility on the rally that was happening the previous day. That's always a concern. So when we reached 65, the dealers quite obviously hedged very aggressively, and we had a massive smash all the way down to almost 61, which was another area of interest on Friday. But I traded it on both sides. I traded it up and down. So at the moment, this XFA is looking pretty healthy. So we're going to see what's going on today. So I picked up along when I noticed that the Asia high was already broken, and we were building some steady volume on the way up. Now that's slowed down a little bit, which is fine. And the first area is a pain point that I have would be the ADR and the London value high from Friday. So I'm going to place a fixed volume profile range for both COMEX and for London. So where are we right now? We're heavily above the value. So this purple area that represents the value area for COMEX from Friday. We're above it. Now, contrary to popular belief, when you are just slightly above that area, that's actually pretty bullish. You don't look at it as a fade, at least not in the market profile concepts. If we were higher up, and we were coming from this swing high, I would be considering shorts from 65. But nothing has really changed. Options players and dealers are still positioned for a run up towards 65. So we're going to see what they want to do as we approach those levels. But my take profit for this particular trade is sitting quite a bit below that. And I'm going to show you why. Because if we look at how London played things, this is a small London value, which always tends to be smaller than COMEX, obviously, because it's technically an out-of-hours market for the precious metals. So I would be looking for a rise, sort of a mean reversion towards the London value low. Now, once we're there, yes, we could go all the way up to 65, but I'm not interested in trading in this heavily congested area. Instead, if we do rise up to 65, I want to see the dealer stepping in to hedge that yet again. At the moment, 65 tends to be the biggest area of open interest. So let me just find the levels here. I was doing some research before I started. Today we have some expansion of that implied volatility, which is a worry, because every time you have the implied volatility expanding, that means the rally is not very healthy, and that the dealers are maybe looking to hedge even before we get there, which is also why I'm taking the stance that I'm going to get the ADR high, and then we'll see what happens there. But 65 remains an area for this entire week. Something to look at. But the sell-off on Friday, it wasn't a panic sell. It wasn't like, everybody sell. It was actually pretty orderly despite the move that resulted in it. But the implied volatility again tells us a story where the IV remained pretty stable. And that means that this was just a take profit move, which is also why I'm a little bit more bullish today. Although, like I said, I will consider both sides of the story if we get all the way up to 65. If we don't get up to 65, I will probably just leave it alone and not touch. But for now, I have a pretty decent entry when we kind of went down into an area of interest, and now I'm just sitting on that and doing absolutely nothing, which is what you should be doing half the time as a trader. And yes, even intraday. Alright, so as you can see, we had a gamma wall at 63.50. It's not a massive gamma wall, it's a smaller one, but out of all of the levels that we have around the current prices, that is the biggest area of interest, a pain point, if you will. So I wouldn't be surprised if we go down to retest that before we continue the rise. The breakout from the Asia high was pretty convincing and very orderly. So we didn't have any kind of spikes when that was happening. So if we have a look at what the volume was doing, you can see that the smash through the Asia high resulted from a very orderly rise. Now, whenever I see that, there's two ways to figure out a breakout in the way that I do things. It's either a huge volume candle that exceeds all the surrounding volume 3 times, or you have like steady volume that is just increasing in the run up to your area like Asia high. So when they go above it, you typically don't see those wicks, and if you even analyze just the pure price action without even looking at the volume, at the point of Asia high break, the break was very orderly. There was no huge spikes, there was no selling wicks, there was nothing. It was just like, oh yeah, we went above the Asia high and we kind of hung around there for a bit, and then we started to rise, then we retested it, and ever since we haven't been back there. So if we go back there, that is my invalidation point, which is also where my stop loss is located. So we just need to sit and wait for the time of day when we start to see a bigger expansion of this move. And if that doesn't happen, it doesn't happen. It's fine. You don't freak out and you don't turn into Hopper McTilt, start to click buttons like somebody's chasing you. Instead, you need to breathe and just say, okay, what is the other side of this story? So you need to be like a detective. It's like, I expected a rise up to 64, or 65. Why did we start to turn around? So you need to turn into a researcher. And to me, trading is not really that emotional at this point. I mean, of course, I have my Muppet moments myself, but they tend to be less Muppety than some of the newer traders or traders who have never dealt with their self-limiting beliefs. And to me, it's all just research and data. So if you get stopped out, it's like, okay, why? Did I trade at the wrong time? Did I actually went into a trade high on hopium thinking, well, 65 definitely happening, but how was my entry? Did I obtain a good entry, or was it a really crappy entry where I'm just chasing and then my stop doesn't really have much sense when it comes to the structure? With the stops that I use, I don't really like to use immediate inside lows. So for example, some people will be like, D, why don't you trade on your stop now? You have another low here. Because that's the first low, and intraday what tends to happen is that the dealers will use the immediate inside lows as liquidity grabs. So by you placing a stop immediately at the first inside low, you're basically just asking for it. You're asking to get stopped out, you're asking to for the dealers to take your money. And, we always want to be trading with the dealers rather than against them, because trading against them rarely works. I'm not going to say never, but it rarely works. And I like to put my stops at the second inside low. So if you have one here and you have another one here. Now, if I happen to be in a trade where I'm in the middle of the perceivable swing on any time frame, that's a crappy entry. And to me, that's like I shouldn't even be in that trade. And yes, I will sometimes enter thinking, oh, maybe I should have gone in. And then when I notice that my stops are not really at the point where I would like them to be and where they should be logically, I will be very careful to take the trade off if it's not doing anything that I want pretty much within the first 30 minutes. So it's not like 2 minutes and not 5 minutes, it's 30 minutes. So I will give it a full TPO, which is basically a 30-minute time period from the market profile, that's what they call it. If it's not doing what I want it to do, I will pull it off early. So that's how I manage my early exits. So they're not emotional, they're just, okay, well, the entry is not the best and my stop is at a complete nonsense level. But yeah, this could still work. So I will take a punt sometimes if I miss the trade a little bit. But on most occasions, I will try to position myself in a way that I perceive the market to be doing something and then me trying to align with whatever they're trying to do. So it's a little bit different than bull flag, go in. So yeah, a lot of research goes into this. So the hilarious part was when I started these streams, yes, we were supposed to be doing DAX, but I purposely started at this time because this is the time when I normally trade DAX. So I'm not a huge fan of trading precious or base metals this early on because there's not much going on. But today we have a smash above Asia high. That is an outlier day. We are already traversing through most of the day's range with a view that at some point this 6430 is going to be exceeded. So we'll see what happens right now. I think that we're still battling the initial balance. So we tried to go higher above the initial balance and we did have a pullback. Asia high really needs to stay here. Ideally, even this gamma wall, which is a minor gamma wall at 63.50. Slight worry, like I said, is that the initial overview of my implied volatility tracker is that we have an expanding volatility on this rise, which means we may run up to 64.50, never reach 65 and then roll over again. But it does seem like they did the take profit move on Friday and now they're back up, but caution is advised. So your first pain point would be the return to Asia high. And then if they hold that, you have another chance at a run at 65. And again, this is not suggestions, it's just what I'm seeing in the options market and how we already behaved and how I'm creating my plan for today. So a return to Asia high and a hold would mean another run up is warranted. If the Asia high doesn't hold, just, either short it and, take your money and run for the hills. But I wouldn't necessarily be short before we reach 65. So that's just how I'm viewing silver today. So we'll see what happens. But yeah. All right, let's have a look at some questions. Let's have a look at who's in chat. We have Anya, Gorillionaire, Verti Trades. I don't know how to read your name. And you have a question for me as well. What confluences or criteria do I look for before entering a trade? I wouldn't say I look for confluences necessarily. I mean, I always have all of the metals, the major metals. So I have copper, I have platinum, gold, and silver on one screen. And I do the same for energies markets and also for the equities. So on the equities, I monitor DAX, YM, NQ, and ES, even though I don't really trade NQ much these days at all. But I have traded it in the past, so I do know it very well. I just don't like the craziness of it because, I'm a little bit older and at this point my brain doesn't work as fast. And I also don't like the fact that you can't easily emotionally regulate while you're trying to hold a trade that's lasting more than 3 seconds. I'm of the opinion, unpopular opinion, that NQ is not suitable for most traders and that the only reason why a lot of people are trading it is because it's fast. And to me that just spells lack of delayed gratification. As traders, our very first job description, I suppose, would be patience. And, chasing fast profits or doing statements like, I love NQ. It's like, it's a product. You're not supposed to have emotions attached to it, especially not romantic feelings. But at the same time, if you're an experienced trader and it's working for you, you're consistent on it, you do a hit and run, and you can keep doing that for 3 months, 6 months, 9 months, a year, just keep at it. It is your product. However, for most people, that's not the case. Most people are pretty chaotic from what I could see in the VIP. And I tried my best to move people away from NQ, but I was not successful. I always say, consider trying other products. There's gold, there's silver, there is copper, there is, natural gas, there's heating oil, there's RBOB, there's like so many other products. And people are like, NQ or bust. So, it's something that keeps me up at night. So yeah, confluences, I wouldn't say confluences is the right word. I would say that conditions and conditions that must be present at the time of me taking the trade is more what I look for. But confluences, I just monitor the entire relationship between the asset classes, because if there is a risk off or a risk on sentiment, you can spot it pretty early on, because you see that there's suddenly some correlation happening between commodities and the equities. And typically on a risk-off day, when you've got negative news or some wars kicking off, that will cause equities to go down and commodities to go up. I'm not seeing that today. I think there was a little bit of that during Asia, but now that seems to have came out of focus. So right now it's back to normal until we get maybe some more news. And yeah, how come I don't trade treasuries? I generally trade slow and steady. So no, I trade slow and steady, but that doesn't mean that I like to trade things that only move during the monetary policy releases, and that's the problem with bonds. When I stepped into my first prop trading job ever in 2013, they tried to put me on a fixed income desk. And I remember putting on a trade and going for lunch, and I was gone for like 90 minutes, and I came back and the whole trade was 3 ticks in profit. I can't trade things like that. I'm sorry. So I still need a certain range. If I look at the bonds, they typically float between sort of like 45 and 70 ticks a day, whereas unless there's a monetary policy, and then they just move crazily. So that's my issue with them. I've never been a fixed income trader. I did work for a London company where a lot of bond traders were located. I also find that too slow. So whilst I like slower products, I still like them to have a range of a minimum, absolute minimum 180 ticks per day. But really I'm most comfortable with products that have a volatility in the range of 350 to 400 ticks. So not crazy. So if it goes above 500, 600, 1,000 ticks per day range, that's also too much for me. So I look for that sweet spot where the volatility is just enough to give you a beautiful follow through. So that's like drama-free trades, but it still has a lot of potential to give you enough ticks. So if you project the amount of ticks that you can get when you look at what the average range is, that is a very important market risk overview for me. And in that respect, silver right now matches that. Gold has been a little bit too inside bar-y for me. So it does go in runs, but it tends to happen during Asia. And then during my times when I'm awake and trying to trade, gold is very spiky. It doesn't really move much. Like, we can have a look at what the difference is for these times of day. So right now we had, obviously a little bit of a sell-off in silver. And if we look at how the price is advancing, I don't know what this is. This is a supply from somewhere. Let me get rid of that. If you look at how much the structure has changed, this one is barely, like, to me it just looks very flat, whereas this one has a definite movement to it, whereas gold is just looking like it's done not that much since the start of London. So I look for smoother momentum with follow through. And if I don't see that for my times of day, I will stay out of it. And then gold also went into a crazy volatility where at one point the average daily range was going over 1,000. And again, with me and my methodology, that's too much. I don't really like that. So yeah. All right, let's see what happens when we reach this gamma wall. And if we don't get anything, I'm going to kill this, and then we're going to wait for another time of day, maybe once LME opens. Even though LME is not super big on precious metals, it does have a sort of a knock-on effect on everything, because they tend to trade base metals there a lot, and then you can see prices starting to liven up. And that's also because we have the silver fix pricing at midday. You can get a very sharp reversal from that point. We actually saw that on gold, but gold has a different time for the price fixing. It's actually at 10:30, which is coming in about 40 minutes or so. And then we have another price fixing on gold, which is 3 p.m. my time. I am in England, UK. But silver only has one price fix per day, which is midday. And at that point, you can see the true intention, and you can quite frequently find a trade that goes into COMEX as well. So that's some of the things that I look at. So yeah, obviously after about 19 years, my style of trading is going to be a little more complex, because over the years I've went through about 3 or 4 black swan events. And during the first couple, I realized that my methodology needed some tweaks, because it wasn't strong enough to withstand what was going on. And that's how you start adding things, taking things away, and start creating a more robust approach. It's just time. Time, different market conditions. So now whenever we have a black swan event, I actually know what to do. And I know that continuing to trade with size and with tiny little stops that were based on the previous volatility is not going to work very well. In fact, in the first VIP season, I had one of the traders who always traded, he's been trading probably for about 3-4 years, and he was saying how he always trades NQ on 10 points, and he's been getting taken out in like a blink of an eye. So you pop in a trade, one of those moments, we're in, we're out, what happened? And I said to him, well, and his solution was, I'm just not going to trade while this is happening. But here's the thing. I've seen some black swan events that brought extra volatility, COVID being the most recent one, and then the volatility never went away. It basically caused a permanent change in the way a product is moving. That could happen on a negative scale as well, where we had COVID, and then crude oil about 3 years after that completely died a death. And the same thing happened to me in Eurodollar in 2012. That's how I got into prop. I have a YouTube channel called Market Stalkers that's technically been going since 2015, but I didn't really consider it very important until about COVID times. And then I was sat at home being super bored. So I went on a bit of a marathon to create a whole bunch of videos. And I do talk about this story of how I got into trading, and it might be interesting because before then I was a session musician, and until I went into prop intraday, I was still running parallel careers. So up until about 2014, I was still a musician. So and it was fine. It was fine, but as I got older, we got the credit crunch that had a knock-on effect on my music industry. So the quality of the gigs, instead of getting better and better and getting bigger fees and stuff, I felt like I was going backwards, and I was already in my 30s. So the whole jumping all over the world 4 times a week was getting a little bit difficult for me. So I also ended up with swine flu in 2009, which is when I decided to take my trading super seriously. So even though I started in 2007. So it was like, oh, nice. Yeah, I've got a little bit of extra money. This is good. And then I started doing really well, and it just didn't make much sense for me to keep going with the music side of things. I still have the guitars and the saxophone. Actually, Bob over there, my chameleon, he's resting on 2 boxes where one guitar and one sax is resting as well. Born and Vest says, Peters Olivier says, hi Dina, see you again. Nice to see you, Peters. Yeah, always good to see you. Dark One says, D, has the Blotech Discord channel been released yet? If so, how can I get access? Yes, so I'm about to create a YouTube video explaining everything, and I'm going to do it with a bit of value. I'm going to explain how I use the ADR and ASR, which is average session ranges, because those are the things that are printed in there along with the market profile. So yes, we do have a Discord. So I'm going to show you, and the way we're going to do it is through YouTube membership levels. So we have quite a few of them right now. So I did create that already, and I have someone who immediately noticed that that was happening, so they signed up. I think they've been with me for quite a long time, so it's not a surprise. But for example, let me go back to, let's do equities, because I know a lot of you are obsessed with that. So this is what it looks like. So we have 3 channels. We have equities, metals, and energies. There is a YouTube membership that will connect your account, your Discord, with whatever YouTube membership you have on the Market Stalkers channel. For the legacy members, I will probably have to, like I decided to give them access to equities, but you will probably have to get in touch with me, because I don't know whether that can be done retroactively. But I do want to give all of my existing members that have stuck with me when I got sick, and they stayed, even though I don't really do many live streams these days over there. They stuck with me, so that's like a little thank you. But this is what it looks like. So at midnight, the first lot of data is done. So at midnight we have market profile levels, daily range levels that are printed as soon as the GMT strikes midnight, which is also Tokyo Open. And then you get the ADR range, you get what the current price was at the time, you get ADR high, ADR low. I'm not sure if we should maybe rename these to be a little bit clearer. I need to see with the team, because I do have a software development team. And then we have 12 markets that we cater for. We have NQ, ES, YM, and DAX, I believe. Yeah, there it is. Then as the day goes on, for the London session, another set of ADRs are printed, but you then also get the session range levels. I think you also get them for Tokyo, if I'm not mistaken. But with the ADR for Tokyo, it's a little too early in the day, so you're probably better off using session ranges rather than daily ranges. And then right now I also have it to print market profile an hour into London yet again, because we've had some issues with Windows doing random restarts on Sundays and then it not opening up my platforms. It's like, great. So I had to do another thing to make sure that the levels are printed. And then once the main session starts, which is 2:30 p.m. my time, this is all in GMT, by the way, because that's what my platform runs in, you will see that another set of average ranges and session ranges are created. Okay, so here's the one from Friday. So you can see 2:30 and suddenly you get 2 sets. So you get session range. There should be an average range as well. Maybe there isn't. I don't know. I need to look at the stats. Again, I'm still sort of in beta testing mode, but the levels are up and they are running. So if you want to check that out, you will need to go to Market Stalkers channel, or Market Stalker D, I think is the name at the moment. But the handle is Market Stalkers because it's a community, right? It's not just me. It's an entire community of people. And then the same thing for metals. So at the moment we are catering to GC, silver, so gold, silver, copper. These are CQG symbols, by the way. And I do have the general support where it explains the symbols, and also platinum. So, you know, if you trade platinum, it's a really good product. Not very popular though, I don't know why. But it's, again, another one of those metals that is pretty cool. And then in the energies markets, we cater for crude oil, natural gas, RBOB, and heating oil. So, so yeah, you can get a membership that is either one of those channels or the premium membership, which is all three. So that is up and running. I may need to do some manual syncs if that's what you're planning, but the levels are there. You know, you can get my ADRs and ASRs and market profile the way we calculate it, which in my experience tends to be a little bit more accurate than some of the other ways, because we did it by Dalton's guidelines. And yeah, so it is there, so that is coming. I just literally need to sit and create the video that explains everything, which is sometimes difficult for me. I've been meaning to do it for like 2 weeks, but then I also noticed that, you know, we needed to iron out some little bugs that were happening. And I think we've got the process down. But again, now that I'm talking about it, I think I should probably print ADR levels another time at the New York Stock Exchange Open as a third time of day. Because I think that would be useful. I would like to know, like, if Asia moved it a lot, or if London moved it a lot. I would like to know where the ADR is sitting, and whether, you know, you had an ADR line that got exceeded, in which case, so here's how my levels work. They're kind of like volatility bands, with the difference that, like, let's say we get all the way up to 63.30, 320 here. Once, the way our indicators work, and the logic is the same, it's just the platform, right? It doesn't matter, logic stays the same across every platform you might be using. But effectively, once the ADR high is broken, that stays static at that point. However, until that time, let's say that silver smashes down and then somehow creates a new lower low on the day. Well, that's going to bring this ADR lower, because we have a new low on the day, right? So it's like a volatility band, but then if it rises back up to that level, then that area becomes static. So that's how our Blatic indicators are created, and that's how this this algorithm is also pulling data. So it's very valuable knowing where your levels are and how much did we traverse from it. Did we go over it? Did we ignore it? If you ignore it, especially in silver to the upside, you actually have a good reference point now for a backtest. So let's say we go above 64.30 and then it smashes all the way up, but doesn't hit 65 yet. Then you can use this one as a bounce continuation, and that at that point that would be more of a scalp, because you don't have much profit margin at that point to the next pain point, which is 65, taken from the options. So I suppose my way of doing things would be supply and demand just as a general structure on the large time frames, market profile for an overall view of how the auction is doing today, and also some playbooks based on that. And then you have time of day, quantitative extremes, and gamma exposure. So smush all of that together and you have the Market Stalkers method. And that took me about 10 years to create, so, you know. It's funny how some people come to trade and they're like, oh, I've been trading for 2 years, but, you know, it's not really working for me. And then I look at what they're doing, and they're just executing so many trades. Like, even if you're a scalper, you need to be a selective scalper. You can't just smash 50 trades in a day. unless you're going to be a market maker. So run one core options position and hedge around the open interest. That's how they do it. But no, people are like, oh, it's going up. I think it's going up. Click, and then they get stopped out. Okay, well, that didn't work. I'm going to go short. And it's like, can we breathe? Just like for one tiny second. And I'm actually a little shocked with what I'm seeing through the VIP program and how people are trading. You know, most of the first 2 months, it's about slowing people down. Because they keep trying to trade with size in combines that they've just started or XFAs that they've just started. It's like, that's never going to work. You need to, for now, size down and maintain the account first. Let's not lose it. But then there's also this weird culture that seems to have spread throughout the current day prop trading community, where blowing up combines in an effort to pass them super quick is a thing. And then they're like, it's a business expense. It's like, you haven't even gotten one payout. What business are we talking about here exactly? It's literally like going to a casino and throwing some money. Can you call that a business? Well, not until you've created some, a good amount of cash from your poker playing or whatever. But until you have the skills to do so, there is no business. So talk about business expenses is completely pointless. And then, justifying bad trading habits and blowing up combines without having the proof of concept that what you're doing is sustainable over long periods of time, that is just not a very serious way to approach anything. So, I might be somebody who's big into humor, and I have my puppets and I have my grasshopper hat and all that. But when it comes to my businesses, I'm extremely serious. And in fact, people who have met me in that version, they actually think that I have like zero fun. They don't know anything about me as a musician or anything. They just see somebody who's like ultra serious. And I actually had a friend who we were actually in a band together, and she was awesome, and she's also very serious. But we had some nights where we got absolutely trashed, and after the gigs when we were away to Morocco, Marrakesh, and hopping around the world, Hong Kong, Vietnam. So, we've seen each other in both lights, super fun people, but also super serious business people. And then we had another new band member who, I was talking about my trading because I was running 2 careers at the same time. And the band member was like, oh, wow, I think you're probably the most serious person that I've ever seen. And, and my friend Kelly was just sitting there going, and I think in the beginning of my YouTube channel, I also projected that super seriousness to the point where I had people coming to me saying, oh my God, I'm so intimidated by you. Like, I can't work with you because I'm so scared of you. It's like, I'm not that scary, am I? And then since then, I decided to change my online personality quite a bit. And this was a long time ago now. This is probably like 5-6 years ago. And decided to start putting in humor into what I was doing. Because my dad was a musician, comedian, very, very successful. In the former Yugoslavia, he was a frontman of a super, super famous band. They were kind of like a folk rock parody band. And, great music for that time. Blend of funny sort of gimmicky songs, but blended with the folk music and rock and roll as well, which was quite unique. And they were wildly successful. So I grew up in all of that, and throughout my childhood, my dad kind of instilled the comedy relief side of things. He was always telling jokes, but also encouraging me and my sister to be funny. And I actually enjoyed making some videos when I was a kid. I remember me and my neighbor used to make these like kind of stand-up comedy videos when we were like 12 or 13. And it was very enjoyable because, you're doing it to try and make people feel better about the world, themselves, whatever they're going through, and you get a laugh out of them. So I decided to blend all of that into my channel. So even though I deliver some really serious topics, I always try to put some funny memes in there, or get like funny references, and obviously people resonated with that. Otherwise, I wouldn't have had so many traders coming to me. And I think being overly serious with a topic that is already super dry, like trading and data and probabilities, I think that is not very beneficial. Like if we wanted that, you can go and watch CNBC, right? So yeah. Now obviously with the daily live streams, sometimes I'm up for joking, other times I'm sort of a little bit more in pain, so obviously not as inclined to joke about anything. But yeah, you see when I'm on good form, right? I'm always like, always have funny things to say, so yeah. Blue Boy says, you come off as serious with some intense outside passion. Yeah, that's funny. I like that. Verti Trade says, how does someone become a part of the VIP program on Topstep? That is a very good question. So here's the thing. You do have to watch the main broadcast. So once they start to do a draft for the next VIP season, they will be randomly throwing out the VIP sign-up forms. Now, you can sign up just once and get into the mix, but it is a random draft. And because it's sort of a raffle situation, the more times that you fill out the form, the better your chances will be to get picked. We decided on that because I think it wouldn't be fair if suddenly me or Dakota or Coach Hoop would be picking traders that we want to work with, because I think it would be a very unequal playing ground, and this way everybody gets a chance. Now, the group coaching side and throwing everybody's name into the hat obviously comes with certain challenges, because you get traders who, like for example, my previous VIP group from season 3, there was 60% of new traders, but then also 40% of traders who are pretty sophisticated and already had their things. So it's like, how do you approach the coaching side? And I'm somebody who has a master's degree in music, which came as teaching side. So it's like you get taught how to do methodology of raising somebody's skills. And at one point I even considered teaching music, but then I tried it for a little while. I've got to say I wasn't that happy with it, because I was teaching adults who frankly were not very committed to learn an instrument properly. So, I had this one Italian guy who wanted to learn how to play the sax. So and I don't know, I swear he was like a spy or something. It's a bit of an odd situation. And he always seemed to be like quite busy and quite secretive over what he does. And this was in Belgrade, because I was still kind of going back and forth for the first sort of 3 years of the 2000s. I was going back and forth. And at one point I was like, why not? And he was a friend of a friend. And he was like, I want to learn how to play the sax. And we would do the lesson. I would take him through the study. I would make him like slow down and play a certain tempo. And then he would do really well. Then I wouldn't see him for a month. And then he would come back and he would try to play in the same tempo, which by the way wasn't very fast at all. But then he almost reverted back to, like, I don't know, 3-4 months before then. And I said to him, but dude, you were like playing this study at like 120 beats per minute. He's like, no, I wasn't. And I'm like, dude, I run a journal, right? I'm not just doing this like winging it. There's a file on you and what we've done, what tempo we got, which is filled immediately as we're doing the lecture. So yes, you were doing it at 100. And he kept fighting me. So I was like, you know what? If you don't want to do it, just go away. And then I had a couple of other younger individuals. One of them was great. The other one, almost tone deaf. But, So after those 3 students, I decided that teaching music is not for me, because I used to get very frustrated, probably because I was quite young as well. So I didn't have a lot of patience for people who didn't have the dedication to music. And it's like, well, people have lives, right? And they want to do other things. Now I understand that. And I do think that certain maturity from your coach or your teacher or your professor or whoever it is very much a required skill to teach anyone anything. But yeah, these days I'm quite patient. You know, I am in my 40s now, and there's been quite a few years where I had to level up my teaching skills. And it's a different game. You know, you have some excellent traders that can't teach for shit, and you have some shit traders that know everything, but they are actually not very good at trading. However, they can teach the concepts really, really well. So, you know, I fall somewhere in between where, yes, I can trade, and I'm a decent teacher. I wouldn't say I'm the best at either of those, but I'm pretty good. I know how to get you from point A to B in a 6-month period. I will say the VIP program is only 3 months, and I think that's a little too short, because by the time that the 3rd month comes around, you see the growth of people who are in the VIP program, and they start to get it, and I would really want to kind of spend more time with them. But at the moment, the VIP program is only 3 months long. So we got to do what we can do in those 3 months. And I focus on some biggest pain points and biggest mistakes as well. I'm very big on explaining the setup, but then also explaining when it fails. I think that's the more important part. Because when the setup works, it's like, oh, cool story, bro. The end. But when the setup is failing, you need to know the signs that it is going to fail. And then bail as quickly as you can. And I don't think that many people explain that anywhere. So, you know, usually it's like, this is the setup that's worked for me a lot of times. It's like, great, but what if the 30% of times when it doesn't work? And they're like, well, then it doesn't work. And I'm like, yeah, but are they signs? So I'm pretty inquisitive. Like, as a student, I'm pretty sure Hogue can tell you this. As a student, I'm a nightmare. Even though he says that when I was doing Hogue's classes back in 2015, you know, he says, oh, I loved you asking me all those questions. I drowned him, wallpapered, put him in questions. I was such a pest. And you know, because if I'm getting involved in a new knowledge situation, I want to know everything. So I will ask very, very probing questions. And actually, in my first prop firm, they also had an apprenticeship where you had to sit through some lectures for the first 2 months. They were the same thing. And in fact, all the other traders who were in there, every time I would be like, oh, I've got a question, they would be like, oh God, not her again. Like with those stupid questions. So yeah, but Hogue will tell you, oh, you know, I loved it, but I'm pretty sure, you know, he's just being overly nice because that's Hogue. Luckily for me, we went past the whole mentor-student point, and I developed a beautiful friendship with Hogue, which remains to this day, and he's one of my favorite people in the world. So, and I'm always apologizing to him. I'm like, I'm so sorry for all the questions that I asked you. And it's just wild to me that now we get to share the stage and to, you know, talk almost as equals. I wouldn't say I'm as good as Hogue, but you know, it's a huge. It's just a very surreal situation for me, where, you know, I started as a musician who was like, okay at trading, some talent there, and then everything just started happening. So it's just weird how your life can change completely. Like now I think about the times when I was a musician, it seems like another lifetime to me. Let's have a look at what the energies are doing, because this was all quite interesting. Now heating oil at this time, heating oil looks interesting for a continuation downwards to me. We'll see whether I can actually catch that at some point today. But yeah, for now it's a product that correlates with crude oil a lot, because a quarter of the output is actually from crude oil. It's like a mixture. So yeah, they have a huge correlation, but heating oil, when it moves, it bloody moves. It's probably arguably even quicker than RBOB. But all three of those are very, very correlated. So RBOB is gasoline. Crude oil everybody knows, but not many people know RBOB and heating oil. But they do look very interesting. So this is a daily chart. Let's have a look at crude oil as well. Crude oil being a bit snoozy festy, but we still have some time before we hit this 56 level where we turned around last time. This one was already broken, so I wouldn't really count, and this bringing us a reversal. Otherwise, it would have printed a green candle, right? It wouldn't have had yet another downside move. There'll be some sort of initiation there, which, it might happen later on in the day. But I do have 57. It's kind of like a line in the sand. If we manage to get to 57, then we bounce, great. If we get to 57 and then bleed through it, also great, because both of those are in my plan. And just the thing is, I won't be doing crude oil, but instead, if you ask me about correlations, precious metals are not really much of a correlation thing for me, but for crude oil, RBOB, and heating oil, I definitely look at crude oil chart and levels, and then I express my view in whatever looks the best. So, for example, if I'm doing a sustained auction, and crude oil has already massively extended to the downside, but heating oil hasn't. It's like it just extended the initial bounce. I would actually enter a heating oil trade rather than crude oil continuation, because heating oil needs to catch up on a lot of the days, and then there is this like correlating behavior between them. So it's a pretty cool way to look at things. Me and Coach Hoop are going to be on for group coaching today, and we're going to be talking. We're going to try and segue the conversation a little bit into crack spreads. Crack spreads, what are those? It's a spread between crude oil, RBOB, the gasoline, and heating oil. And I'm not kidding, they are genuinely called crack spreads, CRK spreads. So yeah, you know how you have Bund, Bobble, and Short spreads? Well, this is kind of similar, right? So yeah, it's a very, very interesting time of the year for energies. Let's have a look at natural gas from the daily chart as well. And I haven't done a super in-depth analysis on them yet, because it's Monday and I literally just sat down. So I usually do my analysis once I'm over the London stream, and then I sit down and I look at everything, and then I formulate a plan. So I don't like trading without that, and in the morning there's just not enough time for me to do everything, especially because my older doggy now requires some medication. Somebody asked me, how is my dog doing? So he's doing okay. He's still alive. He had a moment where things were a little bit sketchy. I took him for an echocardiogram when I had to. So it wasn't last Thursday. It was the Thursday prior. If you're here every day, you will notice that on Thursday I didn't do the stream, and that was why, because I had to take him for a scan, because he was short of breath. He had this like death stare. He wouldn't sleep. I didn't sleep. Nobody slept. He was just coughing all the time, and I knew that his MVD had progressed. So he's a Cavalier, and he's 13, so he's an ancient Cavalier. But so we did very well to bring him to 13, because most of them pass away by about like 8 or 9. So he is old. He's an old dog. But he still exhibits interest in walks, interest in food, cuddles. So it's not time yet. So I wanted to see if we can make his life quality a bit better. So I took him for an echo scan. He is in heart failure early, so early C. And with that, some new meds have been introduced. I have put him on Entresto. He's been on Vetmedin, which is like a miracle drug in and of itself. But now he's got diuretics. And he also has this new drug called Entresto, which is also for humans, by the way. That seems to have brought back his spark for life. So he is bright-eyed again. He's got more energy. He stopped coughing every 5 minutes. So the cough is actually reduced to only like a handful of times a day. And it's not nearly as horrible as it was. So he's still with us, he's Miracle Cavalier, keeps going. I don't know what his life expectancy is at this point. If the heart doesn't get him, he's so old that something else might get him. It's just the nature of old dogs, If you have a grandma who's like 88, she might be in great health, but she's still 88, They become very fragile. And we'll see. So far, knock on wood, we're doing well. We managed to bring him back from the brink of death. He had some fluid in his lungs, so I'm taking him again on Friday for another scan to see whether that's improved. And Entresto seems to have, we're only 10, 11 days in, and it's already had a massive, absolutely massive difference in the coughing and everything. Even if you were here, he's always next to my desk, you would have heard him cough nearly all the time, just mere 2 weeks ago. He would get up and start choking. But now he's there, and we've been streaming for almost an hour. He hasn't coughed once. So, fingers crossed. Fingers crossed we have him for another sort of 6 months. Let's get him to Christmas. Then we'll see what we're working with. Luckily, this winter is very mild, so he's not going to doggy school anymore, unfortunately, because that's too long for him. That's 4 hours of craziness and sniffing and activity. He's way too fragile for that. He's a cardiac patient, and at this stage, I don't want to overexert him. All right, so we didn't even come down to the call wall, and we bounced from it. That can be a bullish sign because I have a reference point that should be touched. They narrowly missed it. So I'm still pretty confident in this trade. So now the next step is to bust through this 64.25 high and to try and reach at least ADR high. That's probably not going to happen for another 2 hours unless something comes in, like some news or something. But yeah. Alex is asking, what do you suggest as an alternative to NQ to somebody who might just get into it for how volatile? If somebody might just get into it for how volatile it is. Well, if you want to stay in equities, I would suggest YM. Because YM is, on paper, kind of crazy, but it has more respect for the levels. NQ is all over the place. Even if you have a gamma wall, it's going to overshoot it before it reclaims it. Same thing with VWAP. Whereas YM is probably the most sane product. It still moves, but it is cheaper and it doesn't have 1,000 ticks range, but it does have a pretty decent range. So I can tell you what it is now. Let me just find YM. So just the difference between the two. So YM, current daily range, you're working with almost 500 ticks. And NQ is 1,236 ticks in a day. So, it's basically half the size of the volatility. But that, to me, makes it a lot more palatable. Now, if you're open to exploring other products, micro silver is a good one as well. If you're open to exploring RBOB, that's a little bit difficult because to me RBOB is not a standalone product where you can just use one chart and only trade that, whereas silver is. You don't have to see what gold is doing in order to trade silver. But because of the correlation and the fact that RBOB is a derivative of crude oil, it's not to be taken lightly just on its own. So you have to see what crude oil is doing and what crude oil options are doing, where crude oil levels are, and then watch those as you're expressing your views in RBOB. So it's not very suitable for beginners. So I would say your best bet would be to look at YM first and foremost. Maybe RTY as well. RTY is actually a really good product that is not talked about enough and yet also moves a fair chunk. NQ with its current volatility is unique, but it is also bonkers to the point where people can't hold their emotions in a trade very well. And that can be disastrous. I've met some amazing traders. Actually, Coach Ray is one of them. So Coach Ray and I met when he came to me for coaching in 2019. He was actually one of my first online coaching clients. He was maybe I don't know, the fifth person or something. I've coached before, but it was all in a setting where, we've got some other traders in a firm, so Dee, can you help them out? Sort of business. That's how I got into coaching. It wasn't some calculated effort. And then it just naturally translated into the online space, especially during COVID. But yeah, just before COVID, I was like, okay, well, let me take on some people because I do want to try and get my businesses off the ground and whatever. And Coach Ray came to me. He was trading NQ, and he wasn't doing very well. So I moved him to GC and CL. Within a month, he transformed. So it's not that he was like, oh, he couldn't trade. He could bloody trade. Like, that man is the most patient person that I've ever seen in my life. He is, just doesn't allow anything to irk him. But NQ irked him. So as soon as I moved him away, everything just clicked for him. And he didn't need any hand-holding or anything. He didn't even tell me he was doing a combine. And if you don't know about Coach Ray, he is the one who has one of the longest standing Topstep accounts. Longest standing. I think he's going on like 5 or 6 years now. It's just insane. So, you know, very, very interesting that if you think you're not a good trader, it could be just the product. It could be the product. The fact that you cannot emotionally regulate yourself because of the speed of price action. If that's your issue, even if you don't know it, but maybe you suspect that you're making a lot of mistakes and you're not holding on to trades long enough, you need to move away from it. And I'm telling you this with the best intentions possible. So, yeah, YM definitely a good option. RTY if you want to stay in the equity space. And if you want to explore some other instruments, I would suggest silver. It's really a very steady, not a dramatic product that has a lot of follow-through. Typically doesn't change the sentiment of the candle in the last two seconds, like NQ. And you can actually find some amazing trades that just do what they're supposed to with least drama imaginable. And I also need that, right? I have a chronic illness. I need calmness. Stress actually exacerbates every symptom that I have. So I need to be calm in a trade. I need to be able to track what's going on over the 15 minutes, 30 minutes, 2 hours. That's how I get my bigger trades to play out. It's not by me being nervous in a trade. It's by me going, okay, this is doing okay. It's not busting through any levels, then reclaiming them. It's not going on these like massive spikes that have 1,000 ticks in them. It's just a steady progression. And of course you're gonna have shakeouts. Of course you're gonna have, you know, moves that go one way. But generally, if you can't formulate a good plan, and if the levels that you've formulated in your plan are not either not showing up or being run through, and you're expecting a reversal from them, that's a problem with the product, but also to some degree with the plan. And then also there's the question of stop losses. Everybody wants to nitpick on stop losses on NQ. It's like, oh, I'm going to use 20 ticks. So 20 points. So 20 points in a product that moves 381 points, which is 1,500 ticks in a day. You're effectively not even using a tenth of the day's range, whereas I like to use a third or a quarter, maybe fifth or a sixth of the range for my stops. The sweet spot is like a quarter of the average session range, not the overall daily range. And that's why you see my stops being a bit bigger, because they're based on a formula that will allow me to capture most movement and still have the positive risk reward within the range when I'm getting involved, wherever I get involved. Yeah. So from that point of view, NQ to me, I would need to use 95 points for my stops. I'm not going to do that. Like, it's not necessary. There are other products out there that don't require you to put so much risk behind a position. And some people are like, but Dee, why don't you lower your stops? That's not my methodology. That doesn't work for me. That means I will never capture bigger moves. And then you turn into a grasshoppering muppet, clicking buttons all day, every day. And then the move happens, and you're not on the move. And to be honest, that hurts me more than actually being wrong, straight up. So if I'm right on the direction, I want to make money from it. It's just how I am. But if I'm right on the direction, it shakes me out and it still goes my way, that's my mental trigger. Like that is the point where I start throwing things. I'm like, no. No, it's not happening. All right, we're touching the gamma wall. If we cannot pull back from here, I have to grasshopper out of this. Early exit. But we don't do it into a candle. I need to wait until the next 15 minutes is over. So we're going to move, not to a lower time frame, but to a higher time frame, and wait 7 minutes. So this trade has to survive for 7 minutes, and it also has to show me whether we end up with a buying wick or we end up at the call wall. So we need to hold the call wall and ideally end up with a buying wick in about, well, less than 7 minutes now. So higher time frame, 15 minutes, and we wait for the price action to show us, and then we'll see. Early exit, stop, or we hold. So this is now the OODA loop. But I cannot do anything. I cannot do anything until the 15 minutes is up. And then we make a decision. I don't make my decisions on a 5-minute time frame when the trade is not doing what it's supposed to be doing. I don't make it on a 1 minute, 2 minute. I don't make it on bookmap. I let the price wiggle around the position. And, you know, sometimes this drawdown is actually an opportunity for me to scale in because I'm only in with 1. And right now, my core position max default is 2 on silver. So we'll see. So, you know, some ebb and flow is always a possibility, especially at this time of the day. If we were trading maybe post NY cut, so after 3 p.m. or into the euro close, then I would be more inclined to see a follow through immediately. But me knowing that statistically, silver and gold tend to get stuck in a range, and they do a lot of ebbing and flowing for this time of day. I need to take that into account and just see what happens in 5 minutes time. But yeah, to me it hurts more to be right and not be in it and result in a stop loss because I was nitpicking on stop losses than just getting stopped out for being wrong. Maybe I'm different. I don't know. Right, let's see. I think somebody's having troubles with their personal account. Do I plot ADR low-high when gold opens? So the open is in the middle of the range. Yeah, so I divide the ADR and or ASR in half. And then I start half above midnight, half below midnight. And then that tracks it throughout the day. So until one side is exceeded, touched, not virginal anymore, that is when the volatility band for that side stops moving, but the other one still moves. The other one still moves. So, because you can have this thing where we smash into ADR high, then it goes above it, but then it still reverses, reclaims it, and at that point you can use the ADR low as a full rotation. Like that, this is the case where, for example, we go above Asia high and the ADR high at that point, but then it reclaims the Asia range, and then the Asia range fade setup is on the cards. Today we don't have that because we're above Asia high, so that doesn't apply. And therefore ADR high today is just a magnet. It's not even a sell-off point because I have 65 in my sights instead. So I needed to overshoot, then do a fade. So the idea is that I would run a fade if the price action permits from 65 down to the former ADR high. DJ Ron says trying to phase my way out of the music ed. Yeah. So Bull Invest, the VIP program is a Topstep program. It's not mine. Mine is just personal coaching and a methodology that is CPD certified based on what I do. So it's not the same. VIP program is a group coaching setting where each of the 11 coaches get 50 randomly assigned traders that are done via draft. And then we spend 3 months doing dedicated videos, lectures, and discussions in the Discord. And yeah, we aim to raise people's skills. We've had very good track record. Every single coach, not just like me or somebody else. Every single coach has had a huge hand at raising people's skills in the short 3 months that you guys spend with us. So it's super valuable. At the moment it's free. But I don't know, that might change. Don't ask me. It's Patak's baby. So if you have questions next time Michael is on, you can ask him what he plans, what his plans are. But for now, VIP program is still free. At least the last season was, so yeah. I don't know how they can do it for free either. So it's like, it's crazy. He's like so generous. Okay, Bull Invest says, I'm looking for a direct funded prop account for 2026. I think direct prop funded accounts are super expensive. And they have shackles of consistency rules in the funded. I don't go to any prop firm that has a consistency rule at a funded level. So the only two companies that I like is Topstep and Trade Day. The only two. Because they have consistency in the funded, in the combines and evals, but no consistency rules on the funded level. Anybody else? What, are they punishing you for making profits in the funded? Yeah. Why? To save money. So I don't know, that's a bit dodgy to me. And coming from old school prop where we had no consistency rules whatsoever, but at the same time, if you would full port on the first day of them giving you the account, you would lose the job. They would boot you out of the office, never to be seen again. I also think that consistency rules during an eval are a good way to see how people are going to behave. So slow them down at the eval level, but once they prove themselves, even though I don't know how in this day and age you can even prove yourselves through like 2 or 5 days of trading, but that's another problem. Don't put the brakes on in the funded level. It's like, what, you're punishing traders for making profits in the funded. So that one I cannot get behind, I'm sorry. I really do think we need more regulation on the side of online prop firms, because it's a bit of a wild west at the moment with all of these new straight to funded firms that are extortionately expensive and unnecessarily raise the costs to the trader. And you know, a lot of people are newbie traders and they're like, why should I need to do an eval? And then they pay an arm and a leg to get into an instant funded account only to blow out of it. So instead of blowing out with like a $49 of Topstep, they blow out with $600 or $450 or whatever the pricing is. So I don't know, I don't really get that. I think it unnecessarily increases the entry level cost. And it's almost like going backwards rather than going forwards. The whole point of prop firms online is that they are so affordable to everybody. So now the straight to funded guys are kind of saying, well, you know, we're looking for traders, skip the eval. It's like, most people shouldn't skip the eval because otherwise we wouldn't have a 97% failure rate in the evals. And what you're doing there, and you know, when you go from your personal trading, and you're probably doing some swing trades there as well, and you go to intraday, it's a completely different ball game. There will be a huge adjustment. I was a swing trader for 5 years before I went into prop. It still took me an extra 2 years to crack prop trading consistently. Like, was I making money? Yeah, but it was all a bit haphazard in the first year especially. And then by the second year, I was like, okay, now I get it. I see the metrics and, you know, I know how to formulate my model inside these tight metrics that the prop firm requires you to have. And that's when you like grow as an intraday trader. So to think that you can just go from, doing anything you want effectively in your own account to a prop challenge and be a prop trader, that's a different ball game. So just please, please, please think about that. And also Topstep has cheaper evaluations that you only take like 2 days to pass. And they want you to stay within the 50% consistency rule. It's like, it's such a basic rule. It's like 2 days. So, for much less money. And then obviously the no activation stuff. For 50K, you pay $89. And there's no activation fee. So that's all in. That's even less money, net, right? So I'm not really sure. Let's put it that way. At the moment, I'm not sure with the consistency rule of instant funded accounts that is a good thing for the industry. So it's just my personal opinion. If you want to plow in like $600, $700, whatever it costs, into an account and then blow out of that in the space of a week or two or even a month, if you're a well-capitalized individual, go for it. But I just think that there's a better way to do that. And then you also don't have consistency rules in Topstep. So, I don't know. Consistency rules at the funded level suck. That's my opinion. Legit Assassin, I'm at 1,800 loss in my MLL is 3,000. Trading NQ, how do I save myself? Stop trading NQ. And go to micros. Yeah. Molly says, I'll always listen to your jams. Thank you. Thank you for watching. One thing I never understood is pricing in. Can you talk about it? And how to take a trade based off of it. Pricing in is not any kind of a strategy, but for example, let's take natural gas. Because natural gas seasonally, I think it has a better explanation of why and things have happened. So let's say seasonally, natural gas should be going up, right? Because it's cold, people are using heating, and natural gas demand should naturally go up. But clearly, very clearly, that has not happened this year. So what's going on? Well, here's the thing. The storage, even though the weather is colder, I think we have about 10% colder weather this year than in the previous decades. The storage of natural gas is, I think, 8% higher. So they have more than enough reserves. Therefore, all of the institutions are hedging their downside risk. So what does that mean? They're buying puts. Yeah. Buying puts. What does buying puts do for the price? Well, obviously, if you have a lot of puts, a lot of put buyers, that's going to drive the price lower. So we can say that the upside move on natural gas has already been priced in. So this rise was it. That was it. So why did the drop happen? Because it was all very priced in already. So we have more storage, colder weather, we're good. And then it goes down. But it's a very, very tricky thing. It's a macro layer that takes a lot of nuance to understand. So only if you really understand the industry to the core, like for example, is the AI stuff all priced in already in equities? Probably not. Probably not. Why? Well, because we still have people making strides and massive advances in the AI space. And no one company has yet won the war, which is why they're at war. Everybody's throwing so much money, trillions of dollars, into AI because whoever wins that game will control the world. It's a serious thing. It's a disruptive technology like we've never seen before. Is that priced in? I don't think so. Not yet. That's why the equities are just screaming to the upside. But it is somewhat an artificial bull run, in my opinion. not trading advice, right? So why is it artificial? Because nobody's making money from AI. They're all running at a loss. But the end game is the world's domination part of things. So they see it as worth it. That's why we've got this massive bull run, bubble, whatever you want to call it. Once that war is done, once one of the companies wins that war, maybe we'll see a serious sell-off. So that's one extreme version of the story on equities, of something being priced in versus not priced in. But natural gas, I think, paints a better picture for pricing things in based on macro. Do I use that? Very occasionally. But with commodities, it's easier because you do have the storage information, you have the weather information, you have seasonality. NQ doesn't have much of a seasonality thing. It's got a little bit, right? It's got a little bit of it. What's up, Seven? I need to let Seven out of the office because I think she needs to go out. And Seven, I thought she wanted to go out. Nope, she wanted to go and scream at the van driving through the farm. She's a funny girl. She's a prime watchdog. Will bark at everything. Yeah, so pricing in, I don't think is a, especially if you're a shorter term intraday trader, if you're aiming for positions, I don't know anything about your trading, but if you're aiming for positions that are lasting you between, 2 and 5 minutes, and even my ones, like 2 hours, I don't think that there's too much value in you knowing whether something has been priced in or not, because it's very likely that we've already missed that move. So, just trade what's in front of you. We're very short-term traders. Even if you hold something for 7 hours, you're a bloody short-term trader. You're going to be out of that position at the end of the day because that's what the prop is all about. It's intraday, right? So don't bang your head too much about it. Trade the level, trade price action, trade order flow, trade sweeps, absorptions, and continuations. That's going to serve you a lot better than going, was this priced in? Or why did this fall? Like, just trade what you see. I think that's definitely something like overkill and paralysis analysis. Macro intraday doesn't always come into the picture. Like, for example, we get to the euro close. What's the expectation across the board for everything? That we're going to have a bit of a wobble as a take profit move as the Londoners are closing down their positions. So whichever side that happens, it's not a macro picture. It's a complete scalp, and it's an intraday event that we can take advantage of, and you can make a lot of money just based on that one assumption that is statistically valid. Then you going, I wonder if this was priced in or not. Who cares? Just grab your 50 to 70 ticks and run. Go enjoy your life. Spend the money. DJ runs. D, can you share how you get your data for the gamma wall, please? Okay, so it's a combination of a couple of things. There is a company called Mon-Thurs, which I talked about on my channel. You can go and see the second last video with a bit of a clickbaity title purely because of the YouTube algorithm, because YouTube algorithm generally hates me, but I think I found a way to get around it because my last couple of videos actually, or 3 videos, performed really well with, very little effort on my part. But it did involve clickbaity titles, so I do apologize for that, but it's just blame the YouTube algorithm, not me. So I talked about it in a video called Wall Street Hates If You Know This, or something like that. So basically that's all about Mon-Thurs. But I also take you through some of the main conditions of what I expect in certain market states, like negative gamma, positive gamma, and all of that. But there is a second part to that, even maybe a third part. So there's bar charts, which you can find very, very easily on Google. and you go to, just if you want like free data, but it will involve some AI stuff. Oops, hold on. I think I've loaded up my computer with a whole bunch of stuff, so the RAM is choking a bit. I need to shut down a couple of things here. I probably glitched my max headroom if you're a child of the 80s and 90s. Alright, so bar chart, go to Google and say, like for example, if I want to find silver, I will go into the monthly options. So I will say bar chart, silver monthly options. Oh, we're still choking. Why am I not in focus? What's going on? Have I been out of focus? How long have I been out of focus? Not long. Or is that just my YouTube? No, that's just my YouTube. Okay, let's stop me streaming in the background. That's not helping things. Christ, okay. Why not gold long? I don't like gold because I think it's a crappier product than silver at the moment, with less follow through and too much drama in order to reach a level. So also the intraday candles, even if you go on a 2 or 5 minute chart, they are spanning like 180 ticks. So from a market risk point of view, that's a lot of risk, especially on a prop account, and it just doesn't match my risk model at the moment. So silver it is. Where was I? Yeah, so bar charts, free options. So free options data. It's a bit delayed. It's a little bit delayed, but what you can do, I'm still choking a bit here. Okay, so don't know whether it's gonna let me do this because it seems to be struggling. Why is that happening? Hold on. I've got to kill some other things here as well. My God, I've got so many things open I didn't even realize. Okay. Alright, let's try that again. Is that better now? No. Maybe this is something to do with my display. Anyways, I can't, for some reason I can't drag in a window. It's like keeps locking up my computer. But you can sort of see here, this is the options chain from bar chart. Okay, hold on. We're there, yeah. Okay, so Google bar chart, silver options, and you will get to this page. So here's where AI can help you a bit. Now you may need to give it some prompts in order to actually get some usable data, because just staring at this, it means nothing. So I actually build, so I'm an amateur coder, you know, I wouldn't call myself, you know, oh, great coder, but I get things done that I need, okay? So I've built myself an implied volatility tracker, but I also use all of this options data to match it with end-of-day data that I get from Mentor Q. And then for the most part, you will see that the GEX levels, which are basically levels with slightly less open interest but still a pretty high open interest, can be very good orientation points. So you can give the prompts to AI to analyze that without a bias. So you must tell it to not have a bias, otherwise it's going to start hallucinating and making shit up, which is terrible. And, you know, with AI you have to be so careful because it just goes off on one. And then sometimes it doesn't even use real data, it will just make stuff up. You will probably need a little bit more of a sophisticated AI. So I like Opus 4.5. Because it has like higher reasoning, and that tends for me to work better than ChatGPT, which doesn't understand anything. It will be confusing things. Like, for example, whenever I give it prompts, like let's say I would say, if we go above Asia high, then let's look for the fade. And ChatGPT would then consider the Asia high to be the ultimate target. Whereas Opus understands, when you give it that sort of a prompt, it understands that I'm looking for a deeper fade without me having to spell things out for it. So it's higher reasoning. And there's another one coming, I think it's from Google. Was it NA10? Haven't tried that one, but for me, Opus 4.5 has been working really well for this purpose. So you can maybe use AI for that purpose, to basically ask it to give it the GEX levels and gamma walls based on the bar chart options data. But if you don't want to do any of that, then you would have to pay for mentor Q levels, and they have an indicator that just plots the end of day levels on the chart, which stays. On a lot of the commodities, you only need that one piece of data because the intraday gamma flows are not nearly as dynamic as they are in, let's say, ES or NQ. So for those, you may have to default to the intraday levels because it just changes throughout the day. Not drastically, but on some days, if we have an outlier day, then you do need to see where the new positioning is, and that's not going to be at the end of day data. So, you know, it's an amazing view into the dealer positioning. That's what I really, really love about gamma exposure analysis. Okay. So yeah, all right. So I'm gonna stay with this trade, but we have come to the end of the stream. So I want to thank you for hanging with me and spending time with me. I will see you a bit later today when I will be on for group coaching with Coach Hoop. And yeah, come bring your questions. You know, I can continue to answer questions about whatever you want to hear. But yeah, do join us for the main broadcast. And that's all I have for you today. Until a little bit later on, this was the Eurotrade. I'm Marcus Stoker D, and I will see you very soon. Take care.